Hello and welcome back to Dukascopy TV. In the first of this week's collaborative interviews, Agefi journalist Nicolette de Joncaire speaks to M&G investment representative Leonard Vinville. Over to you, Nicolette.
Convertible bonds offer both credit and equity exposure. Leonard Vinville of M&G is here with us today to review the income volatility and equity upsides of these products. Leonard, and welcome to Geneva.
Thank you.
Why are convertible bonds attractive from a risk-return point of view?
Well, convertible bond, as a lot of people know, it's a bond that can be converted into shares via an equity options. And then therefore you got two main features in convert. You have the bond part that you can have as a protection on the downside of the equity markets, while you have the yield protection, and the equity part that actually participate to the rally of the equity market. And then therefore convertible bonds that are what we call balance at the money got an asymmetric return profile and participate more to the equity rally than the equity fall.
On the long run, in the long term, convertibles outperform both equity and debt.
If you look at a very long term, and you can see in the graph since '96, you have boom and bust of the equity markets. And you can see that basically the volatility of the convertible bond, the performance, is much less than the equity market. But you can see also that the convertible bond participate to the fall of the equity market to a certain extent due to this protection of the bond floor. At the end of the day, convertible bond outperform equity market and debt market over the long run.
The process by which you actually construct your positions is actually quite complex. Can you tell us a little bit about how you go about it?
Yes, of course. I think convertible bond in the fund, it's all about bottom-up. It's all about stock picking. And when it comes to stock picking, you have to first do a screening. You need to do a screening for the simple reason that you have a lot of convertible bond in the market. And then therefore you can't pick a stock like this and say, I'm going to review it. So the way we do it, we do a screening and we say, okay, we want to look at convertible bonds that are liquid enough. And it's a matter of size of the outstanding debt and size of the equity actually. And we define what is the investable universe. And with this investable universe, we do two screening, one that is technical and one that is fundamental. The technical screening, it's all about assessing the risk-reward part of the convertible bond. And again, what I've just said, the asymmetrical part of the convertible bond. It's also about understanding what can enhance or deteriorate this asymmetrical part and this risk-reward profile. Okay? The fundamental part is a scoring method where we will look at different ratios that assess both the credit of the credit perspective, so the quality of the credit of the issuer, but also assess the valuation on the equity and assess the quality of the assets. Lastly, look at the corporate governance of the issuer and the underlying equity. So it's a scoring method that will score per sector, and then therefore you'll see when you do the screening what is relatively expensive, what is cheap, what is good quality, what is not good quality. Okay? And once we have those two screening, we look at overlapping those two screening, and we're saying, okay, these months, we think that technically speaking, this convertible bond looks nice, and fundamentally speaking, this convertible bond look also quite interesting to review. And we choose roughly 3 ideas a month, and we do a full review, and we start obviously by the credits. We analyze the credits, we'll try to understand and stress test the credits, you know, what happened in difficult time. Is the company will be able to face debt redemption? Can the company also serve debt, obviously, but also can the company repay shareholder? And what is really the recovery value of this company as a lender? Once we're comfortable with it, then we analyze the equity. And analyzing the equity is to understand how the company creates shareholder value. But also, it's to modelize this creation of shareholder value, understanding what is priced in the market. Is a $50 per share means zero growth and trough valuation for the next 5 years, or means double-digit growth and peak margin for the next 5 years? Is it a low expectation stock? Is it a high expectation stocks? That's quite important. Once we have this, then we look at our right within the convertible bond terms and conditions, and we price again more accurately the convertible bond, and we take a decision whether or not to buy or sell.
And how many positions do you have?
So we have around 65 names in the fund.
And thank you very much for coming to Geneva and taking the time to explain to us how you work your fund.
Thank you.
Thanks very much, Nicolette. Agefi will be back later this week for more exclusive interviews. For now, though, goodbye.